Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. Guys, the consumer is in huge trouble. So we're going to go over the data and you're going to see exactly what's going on and what to prepare for as this thing progresses. Let's dive in.
Trade Genius.
Hey everybody, it's Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you've not joined our service yet, come check us out, tradelikeagenius.com. Full service. We have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening.
All right, Bob. So we've been talking about, recession down the line, but now we're actually seeing the triggers that you see that typically, tell us that we're just maybe 1 or 2 quarters away now. So I think you found a slide about how now no one has any wiggle room anymore. And I wanted to kick it over to you to get your thoughts on that.
Yeah, this slide that I'm going to put up right now, it disturbs me because we haven't really begun the massive unemployment that's coming. I think people have been trying to keep the dam from breaking by taking on other jobs.
Right.
And once you lose a job, and remember, to 29% of households, we're not just talking poor people here, okay? There are a lot of pretty wealthy people that are really one paycheck away from being a really poor person. I don't think people quite get that. And the problem now is that a lot of these people, most of their wealth is tied up in real estate. It's not like, hey, I lost my job. I'll just sell my house. I'll take the equity. I'll move somewhere cheaper. Or I'll try to ride this thing out with rent. Well, rents are more expensive than homes, and you can't sell your home because there's no buyers out there that can afford your home. So it's going to become really, really, really gnarly, really fast here as more and more companies continue to lay off. And 29% of households, Phil, we're talking an average household of 3 people in it. We're talking 100 million Americans. Can you just grasp that? 100 million Americans praying right now they don't lose their job or that inflation will somehow abate.
Right.
And I think neither one of them is going to come true. This is Bambi, right, of the Disney movies. Mom
Right.
and dad get burned in the fire here. And I think that's what's going to happen. But this next slide is just more data points for you guys, just saying this is how people are responding to not having enough things to cover. They're just jamming up the credit cards and they're
Right.
going to bail out on them. This is classic. The problem people are going to find themselves in is that, how you, when you get a credit card and they said, hey, how much money do you make? And you're like, I make 100,000, but you say, I make 150, because you just want to fudge that number up a little bit. Well, guess what? When you go ahead and file for bankruptcy or you walk away from the card, you just send, and they go ahead and they pull your tax return in discovery, and they find out that you weren't making that kind of money. You just committed a fraud, and your debt now is not extinguishable in bankruptcy court. And so I don't think people quite know that, or quite get that. And I think what people are probably hoping for is that so many of us are going to be doing this that we're just going to overwhelm the banking system and they're just not going to dare to do this to us. But it's a very real risk. And these charge-offs, look, it's not going to take much to get from where Capital One is now to the next move up, okay? Because we haven't even begun really, we're in a recession as far as I'm concerned, but when they acknowledge the recession, this charge-off rate will probably have the highest charge-off rates ever, Phil, because people, when they lose their jobs, they're not going to get a $100,000 a year job again. They're going to get a $70,000 a year job, or if not 70, you're going to be working for minimum wage, right?
Yep.
You and your spouse are going to be working at McDonald's in California at $80,000 a year. Okay, that's your future until AI and the robots take away half of those jobs. But here's the one that's really, this one the banks must be freaking out on, Phil, and I'll let you take this one.
Yeah, I mean, look, for the first time in 10 years, you have average FICO scores dropping, and the reason why FICO scores drop is one of the big things that they measure is the amount of debt you have, right, relative to your open lines of credit. So let's just say that you have 5 credit cards and you have $50,000 combined line of credit. Well, once you start exceeding what they would consider, an appropriate threshold of that, meaning that you're running up your credit card debt, it massively impacts your FICO score. And I think that is the main driver of why we're starting to see average FICO scores starting to fall across the board. So guys, we haven't seen this in 10 years. This is a significant thing. This is telling you that we actually now have a problem with the consumer. And the other thing too is, as I was telling you guys, a lot of these indicators that we look at on the macro side of things, as far as like the business cycle and things like that, the rate of change is really important. If you look at this Credit One or Capital One credit card charge-off chart, the rate of change here is significant. Last time we saw that was the great financial crisis. So you're starting to see like all of this stuff, trigger now. And then, the consumer has, as we pointed out earlier, they're hand to mouth right now, right? It's paycheck to paycheck. So when it seems like, how are people still going out? How are people still going to Disney World? It's because they've been running up the cards, because you transitioned from people having excess from the government giving them money, which we're now finding out a lot of that stuff went to not running a business, went to things like real estate and other, recreational things. And they got used to that, but that went away. They tried to perpetuate the lifestyle by running up cards. And I see it online too. People like go to these financial counselors and they're just like, well, we just ran up our cards. It's like nobody is being proactive about reeling things back, because that's hard to do, right? It's kind of a smaller example of what happens in the government. Nobody wants to really take the medicine, reel in spending. They just want to continue the lifestyle, even though the gas is run out. And so now we're coasting, and now the car is going to have to pull over to the side of the road and wait for a tow truck. And I think that's going to happen over the next 1 to 2 quarters, Bob.
Yeah, and that threshold's 30%, Phil. So if your usage exceeds 30% of your total line of credit, they start digging your card down like almost like 100 points, and then obviously it goes up from there. That's why it's interesting, if you can afford to get approved for new cards, get them, take the credit, and just let it sit there, so that you got to learn how to play the game. Having no debt doesn't give you the best FICO score. For them, it's they want the best customer of debt, and so if you're going to plan on using debt, then you want to be able to get as big a line of credit as you can, and then just not use it unless you have to. And that way you max it out. The other thing's interesting too, Phil, when you talk about the real estate one, we saw that thing from that person from the IRS. A lot of these people are in big trouble because they're not reporting the income. They use the money for the wrong purposes. And, in Florida, Southwest Florida, ground zero for Airbnb, I think there in one part of Florida, there's 7,000 open listings, but there's 17,000 Airbnb units out there. And I can't even imagine once those start going into delinquency and risk because they're not getting the coverage, or they're trying to sell it. You're going to be looking at an explosion of supply coming on in Florida. And if you want to know ground zero for real estate, it's Las Vegas, Phoenix, and Southwest Florida. And you just watch those areas. And when those things start to fail, then we're in it to win it, all right, on the recession side. The other thing to watch out for is when the ratio between TLT and oil, or you can use like ExxonMobil as a proxy, when that starts to turn in TLT's favor, then we know the energy to bond transition is going to occur. And usually that occurs as we enter into a recession, because energy is usually the last to go. And I don't know about you, Phil, I'll give you the last word, but energy is starting to look a little hinky to me.
Yeah, I think we're going to have a little bit more of a rough patch here as we progress through the month of May, and then we will start to head out. One stat that we're dealing with is that, the S&P 500 has not generated a corrected decline of minus 3% for like 108 days now. So when we're in that, statistically, it's higher 70.6% of the time, 120 days later. That falls into the election seasonality, and also kind of what we're expecting, where we're consolidating this initial pump that we had through the first quarter. We're consolidating now, and as long as we don't start losing some major levels here in the month of May, and we come out of this more or less sideways, maybe sideways to down, we'll see a nice push going up into the summer months. So I think that, at that point, you'll see oil rebound and equities rebound and crypto rebound as well, Bob.
Yeah, so it's going to be a really interesting time. We're going to really be focusing on it over the next 60 days. Hey, I want to thank whoever joined the live stream yesterday. It was a lot of fun. We help people make some money. And so if you're interested in trading with us, just go to tradelikegenius.com. We'll do more of our live streams in the future, but just get in a room. We're doing really well. We think we have a good sense of what's happening, and our algorithms are definitely acting true. So have fun with us, make some money at the same time. Thanks, Phil. You guys have a great one. Talk to you tomorrow.
Trade Genius.